And as always, we're going to be looking for accurate context, good risk management, and always emphasizing good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. Trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, and welcome to the Market Forecast, Friday, May 6th. I'm John Hoagland. Thanks for trusting me with your time. I'm wearing my hat today, kind of a way of putting on a safari helmet, looking for good trades, and also my way of seeking shelter. At my brother's suggestion, we're starting with a little Rolling Stones, Give Me Shelter. I'm sure we're all looking for shelter in these markets these days, looking for ways to limit risk, and that's what we're here to do, is try and find accurate context, look at good risk management levels, and always seek patience. Hopefully you didn't have too many margaritas yesterday on Cinco de Mayo. I didn't. I was pretty good. I had some dinner and relaxed a little bit and did a little studying. And had a good night's sleep, so I'm feeling ready and good to go. I just have to remember, the idea is staying patient. So just looking at the early economic news this morning, of course, we were all waiting for that unemployment number, and we got it. We beat non-farm payrolls and private non-farm payrolls pretty considerably. They were looking for 391,000. It came up 428,000 in non-farm payrolls. Another increase in private non-farm payrolls as well. They were looking for 385. Came out 406,000. However, there was an uptick in the unemployment rate. They were looking for 3.5%. It went back to 3.6%, which was where it was a month ago before it dropped to 3.5. Not a big number, right? But when you look at some of the smaller numbers inside this number, average hourly earnings went, they were looking for 0.4% down to 0.3%. Average weekly hours also down 0.1%. So there's a lot to unpack in this number, and we're going to be letting the markets do that for us, hopefully. As far as the news is concerned, things I'm focusing on, the U.S. stock indices were lower most of the evening after the numbers came out. We got a nice pop, and as far as I can tell right here, it looks like we are failing to hold that settlement number. At least in the S&Ps, we're back lower on the day. A lot of speculation in the news about the Fed rate hike, kind of instilling fears. We're right at the bottom of the range we've been in for a couple of weeks. We're back at the edge of the cliff, it appears. We've got the U.S. dollar approaching 20-year highs. Another 52-week high was put in today. Crude prices continue higher as supply concerns are exacerbated by OPEC's unwillingness, I guess would be the word, to increase production, and rates continue higher. The 10-year yield approaching November 2018 levels. The 10-year yield currently 3.05%, put in a high just over 3.1% in the overnight session. The dollar index pretty much flat at 103.37, and VIX up 5% this morning, 32.92, back above that 30 level, and we're looking for, some potential continuing volatility today. It is Friday. We are at the low end of the range. We've had very hollow rallies. We had some pretty big increases across the board in open interest yesterday. So we're going to be seeing some potential big opportunities today. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome on the Market Forecast. And subscribe to our YouTube channel. You get notifications when we do go live. And speaking of that, I want to thank everybody for joining me and spending time with me this week, whether it was on the forecast or the recap or Make Hogue Money or group coaching. It's always a pleasure to spend time with traders talking about trading. I got to say good morning to everyone. ZK first in the room. Good morning to you. Good morning, Rick, my brother. I love you. Tachyon, Brian, Dan Trader. Good morning, everyone. Finally woke up early enough to catch the beginning. Good to see you, ZK. J Trades. Good morning, Alfred. ZK pointing out an area of resistance he's looking at in the S&P is 43.05. It looks like that would be the S&Ps, and I would agree with that. That seems to be our high from last week and our high from this week. It's a ways away, though. Frederico, good morning. Keith, Zachary, jobs report Friday. Yep. Good morning, Shaw, Marcelo, Ray. You can see I've got my safari hat on today, Ray. I was going to call you out and say that's the goal today, is to just sit behind the weeds and wait for a three-legged wildebeest to limp on by and try and jump on that. Jock Lowe, good morning. Where'd you go? Where'd you go? Where'd you go? I lost you. There you are. Terry, I don't have that Discord link on me. I would be happy to put that in there, but we'll make sure and get that to you very soon. Glitter Sandwich, Scott saw, and he conquered. Denise, good morning. No coyotes this morning. Sarah Hall, good morning to you. Prayers and love, as always, to you as well. Devont, Zoraine, Vince, good to see you on Enjoyment Day. Steven, two B's in a row, like long liquidation profile days. We'd be considerably lower if we do put in a B-shaped profile today, it would seem. Melk, good morning, everyone. Spencer, good morning. Good morning, Zachary. Just a shot away. Good morning. Good movement last night and this morning. Hit 1,100 last night and another 1,000 this morning. Good way to end the week. Nice job, Brett. Nothing wrong with walking away with that for the end of the week, I can tell you. If you are going to continue trading and things don't go your way, pick a percentage of your profits for the session so far. And if you get to that, walk away. Nothing wrong with walking away with that right now. That's always my goal on Fridays, is let's make a little bit of money if we can, and call it a week. Dan, good morning. Charles, Revenge of the Fifth. Yeah, of course. Hey, John, told you I didn't trust the rip, but sad but true. Let's see today. Absolutely. Trading Research, good morning. Dr. VJ. Anne-Marie. Yes, sometimes Anne-Marie. I have my older brother, who's Rick, and my younger brother, there's Tom. There's my younger brother, and sometimes I even get notification that my mom is watching. So we get a lot of family here, and I consider my family, and my future's friends family. Just want to try and help everybody get to the success that they are looking for. Let's turn that hat around and turn on the trading muscle. Maybe I should do that Lincoln Hogue Hawk reference movie, Over the Top. Yeah, I liked that movie. Maybe I'll do that at the end of the forecast here. Open interest to the downside, Sarah? Yes, we've been kind of talking, and we'll look at that on the charts this morning, about the hollow rallies that we've been seeing in the equities, and how the open interest has been coming into the downside, and it did yesterday as well. Yeah, I'll get you some wildebeest. I'll give you a nice hind quarter. Ray, Rob T, hello. Great to hear you. And Anne Marie. Oh, good. Yeah, I was really just so excited to have Anne Marie with us during Make Hogue Money yesterday. And I'm looking forward to her coming Tuesday as much as she wants. Three lines inside. Jerry is awake. Hopefully, John is too. Harry, Liam. Trading research. I respect Anne Marie Band from yesterday's Make Hogue Money. Simply the fact that she called the trade which she was going to take and was run over and reported it as such. Too many pros only speak of winning. No, that's not a professional. And we, kind of jokingly in the rules for Make Hogue Money is we're not allowed to take losing trades, which is a complete joke. Everybody takes losing trades. Yup. Rick says, like our dad said, money's easy to make and easy to lose, harder than hell to keep. 100%. Absolutely. We all have losing trades. We all have losing days. Anne Marie, the point is, living to fight another day. Absolutely. All right. Good afternoon. Good morning, I should say, Keith. Transparency is best. Absolutely. AZDZ. ACDC? AZDC? AZDZ? There are no losers on the internet. Of course not. Of course not. All right. So we've looked at the VIX. We looked at the dollar index. We've said good morning to everybody. We've said like, share, comment, question, feedback. Of course, Tom coming up with the acronym, our favorite acronym here on the market forecast and market recap is anything can happen. ACH. Good morning, April. Maybe the Discord does not open. We'll work on that and get that fixed for you. And I should have that for you, and I will moving forward. All right. So what are we looking at here? Well, we're going to start looking at the E-mini S&Ps, which had a pretty good knee-jerk after unemployment. Things not looking so sharp now. We're right at last week's low, which I'm kind of looking at as the low end of the balance area we're looking at. We are looking over the cliff again. Let's see what we can see. Tom and Rick saying hi. There you go. All right, let's take a look. Oops, that's not the right button. Sorry, guys. I do that sometimes. I got a computer. It's coming today, and it's going to take care of all of my tech problems. So I do apologize. Going back to the beginning here, we added 11,000 in open interest on the way down yesterday. All of our recent rallies have been hollow. They've been losing open interest. What ends up is we end up too short here, and without more continuation to the downside, we have these hollow rips to the upside, which we really shouldn't really be believing because there's no substance behind them. We lose open interest. Yesterday, again, gaining 11,000 in open interest. It's mime day. Just use your imagination. I hit the lucky on button. You guys are unbelievable. You have some funny people in my family here. Funny people. We're Rallies continue to be hollow. Volume and open interest increases on down days. Balance on the daily, is it at risk? It is certainly at risk. Kind of looking at last week's low as the low of that. We've looked below it a couple of times this week, and we've been yet to be able to find business and continuation to the downside. Looking at this consolidation area has probably done a pretty good job of evening inventory in medium and long time, what's the word I'm looking for? Inventories. Okay, we've evening out, consolidation evens out inventory as much as rips to the opposite direction. Take a look at the 30-minute chart here. You're going to rip to the upside, low volume, losing open interest. The other direction, higher volume, adding open interest. That's telling us that the auction process is probably healthier to the downside. We had some overnight inventory to the short side when the unemployment number came out. We had a knee jerk to the upside, which has failed. We are currently going to be opening, if we were to open right now, at the bottom end of value. We have a very narrow overnight range, which basically encompasses that 730 bar that we just put in this high and the low of that. We're holding along the overnight lows, holding along value low. If we open outside of value, let's say we begin to open even lower than that with a gap, we're going to be depending on gap rules. Very loosely thinking that this pink line here, last week's low that we've penetrated and not accepted below, is going to be somewhat pivotal for us. We've seen a couple of rejections this week down below that level. Here's one. Here's another. Haven't been able to close below it. Haven't been able to spend much time below it. Is that going to change for us today? Nobody knows for sure. Of course, ACH, anything can happen. But the mechanics behind this break to the downside yesterday indicate more likely continuation. We've got a whole lot of space up here. We've got a whole lot of potential repair, much the same way we did on the upside yesterday, the day before yesterday. We repaired a lot of that and ended up, not closing all that well. We did get a nice bounce before we did finish the regular trading hour session, and basically we've been stuck in that bounce ever since. I'm going to watch the extremes down here and probably overnight extreme for potential opportunities anywhere inside the overnight session. I'm going to try and stay patient. And again, if we open in range and in value, better trade locations may come as a better trade locations may come as the day goes on. But yeah, the open interest volume, it's going to take something to rip this market away from the cliff it is currently looking over. Here's the crude oil. We've missed the opening range, which is kind of unfortunate, but we had a breakout, which wasn't all that impressive on Wednesday. Thursday, we did add, you get this, 65,000 in open interest. That's the estimate. Higher volume, higher open interest at higher levels indicates higher acceptance of price. Now, whether that's a technical move or whether it's fundamental is moot. My only goal here is to try and find good trade locations and make some money off of this. But the volume and open interest are indicating health in the upside momentum. The breakout continuation, pennant formation, higher volume, higher open interest. Here's the 30. So it's kind of confusing as to where all that open interest came in yesterday. If you're looking at the price opening here and closing here, it would say that the open interest came into the short side, but it's an overlapping to higher range and value. That's where I think the importance of the open interest is coming in, is on higher value and higher price. Yesterday, we traded right down to weekly kickoff low and found support there. We've got some overnight inventory potentially to the long side, but kind of reconciling that now and opening back inside range and inside value leads me to believe if I'm looking to buy weakness in this market, I have a better opportunity to buy weakness at a lower level than I do now because of course we've opened in range and in value. Here's the 1 minute. We're looking if there's any possibility of an opening range trade. It's to the downside, and that seems to be true. Opening range is 109.28 to 109.68, 40-point opening range. Substantial, too rich for me. If I get the opportunity to well, it looks like we did take out the high of the opening range. So the opening range, not necessarily the dead high of the session, which leads me to believe just that little tick sticking out the top of that opening range right there leads me to believe that the idea of buying weakness is a good idea until proven wrong. Where does that prove wrong? We've got a long way to go before I believe that it proves wrong, that we're still in a mode where we want to look to buy weakness in crude oil. Take a look at the Nasdaq now. Oh. Got to restart this computer again. All right. Similar situation, right? We've got last week's low, which has largely enveloped the low end of trade for the last couple of weeks. One of the things we do not have in the S&Ps that we have in the Nasdaq is we have lower lows that have lined up into pretty much 3 relatively good points of contact, 4 good points of contact yesterday. We haven't quite gotten there today, but it looks like this is almost a foregone conclusion. And when we break out of balance, it's go with the breakout. If the breakout is substantial, there's volume, momentum, participation, all of the 4 legs of the table that would indicate more likely continuation. We're seeing the market, opening lower than it has in forever. Take a look at the 30. So yesterday we added 9,400 in open interest in the Nasdaq. Finally, we have some participation that can give us an indication of potential directional activity, and we did that in the S&Ps as well. We actually almost added as much open interest in the Nasdaq as we did in the S&Ps. S&Ps is a $2 million open interest product, not the Nasdaq. This was a pretty substantial increase in open interest to the Nasdaq. So here's that last week's low. We looked below it. We looked below it yesterday. If we find acceptance down below that level, weekly kickoff low, which is 12,610, is the next stumbling point. If we get down below that and find acceptance, there's nothing but space down there, ladies and gentlemen. And is the situation dire enough for that to happen? Everybody has an opinion about it. One thing my dad said about opinions is everybody has one, and they all stink. They're all bad. What's your opinion? How are you going to handle the vision and the information that the market is feeding us? I firmly believe that the market is, excuse me, telling us what it's going to do in its performance in any direction, in some of the chart patterns. All of this tells us where the market's going to go. It's our job to unpack all that information, decide what's most important in the current market state and context, and make our hypothesis towards that. So last week's low, I'm looking at as a pivotal level, almost a short below, long above. Yesterday's low is right where we're at right now. We're not even open yet. We start to open with a gap. If we barrel through weekly kickoff low, look out. There's always the caveat that these markets are extremely resilient until they're not. They're like chandeliers. You drop a chandelier, it's broken. All right, gold. We have a potential breakout of a bear flag. Open interest has been next to nothing for the past 3 sessions as the market has one time framed higher in narrow ranges on low volume, a little bit higher volume yesterday. But now we've got a situation where we're opening below this lower trend line of a potential bear flag. This is one of my favorite chart patterns. It was one of the ways I was able to find a short in the S&Ps later in the session yesterday, which was fruitful. So we've had the market open, leave the opening range at the low of the session. It's traded up through that level and is now holding below. We added 15,000 contracts yesterday in gold. And when you look at the day session was 100% lower off the open. Here it is. All this overnight inventory was to the upside. All of the momentum and direction after the open was to the downside. Almost looks a little bit like the S&Ps. We did bring value higher, but the S&Ps aren't setting up a bear flag. They're setting up an area of balance that we've got to look for a breakout continuation out of, or a failure to break out and a move in the opposite direction. So the market opened, left the opening range at the high, traded up, took care of a little bit of repair, now is showing some signs of possible acceptance in volume below this trend line. Now, this trend line is based basically on this low, and this low, mostly regular trading hours off this swing low here, and that lines up relatively nicely. So if we continue to hold below this level, I can see this market continuing to push to the downside. All right. Dan has a master's degree in fortune telling. Well, then you know what I'm talking about when we're looking into the crystal ball and looking at the tea leaves and chicken bones. And that's really, there's nuances in every market that are saying there's reason for buying, there's reason for selling. It's recognizing what's most important in the current context that will help us set forth a good hypothesis. And if that hypothesis comes true, we trade to that hypothesis. All righty. 6E, we have back in value or back in range. We had an excursion above it the other day. We closed up there. We rejected it in the overnight yesterday. We put in basically a high to low overall in the area of balance. We've looked up above it again last night. We've rejected it so far. The market really holding support now at value high, which when we're in short time frame control, which I firmly believe we are still here in the euro, these levels are areas where you're going to be able to limit risk, and you never know which one is going to provide your opportunity. Look at the way it traded down to weekly kickoff low, almost to the tick last night, within a half a tick of it, and finds the market rotating back to the high of the balance area, showing some rejection of it yesterday. This is an area that we can, perhaps look to find fish. It's been very difficult for the market to maintain price above that. Overnight high is also an interesting level, because that's what we're doing, ladies and gentlemen. We're fishing. We are lions waiting behind a bush, looking for that gazelle to come prancing by, and we're going to pounce. The 10-year, here's the daily. Volume and open interest strong on the down day yesterday. We added 44,000 in open interest in the estimated numbers, higher volume. The market still exhibiting structure to the downside, and now we have new reason. Rates continue to roll higher. Downside structure absolutely remains. Here's the 30-minute chart. Remember, the 10-year traded up to, what was it, 3.1 in the overnight session last night. We haven't seen that in quite some time. So we opened in range and in value. We looked, traded to the high of value, and we see this market now trying to accept below value from yesterday. If it does accept, weekly kickoff low is in the neighborhood. If there are eyes looking at it, price will eventually go there. And nat gas. We got all these still on the 30-minute chart. Let's start with the daily. So with the upside momentum, with open interest, with volume overall increasing, this auction to the upside still appears to be quite healthy. We added another 7,500 in open interest just yesterday. That's, of course, the estimated number. It shouldn't be too far from that on higher volume. Higher price, higher volume, higher open interest. A good chance this market is going to continue in that upward momentum, but doesn't have to necessarily go in a straight line. Do we have any overnight inventory when we opened? Not really. It looks like we're willing to come back down here and retest some levels here. We've got a little bit of possible repair. If we're looking for opportunities to buy weakness, we've got we've got point of control from yesterday. We've got value low from yesterday. If you notice, yesterday we opened, we had to come and clean up this gap. Then the buyers came in and took the market higher. What are we cleaning up on the downside? Where is the market going to find those buyers again today? I was reading something that there's a lot of speculation that $10 is the next stop for natural gas. Of course, it's not going to go in a straight line. It's going to go to the levels where the most pain is put on traders. The point of greatest aggravation, we used to say in the lumber pit. The market goes to the greatest point of aggravation. I find that when the market is doing that, the best trades are the ones that scare me. If I'm really confident in a trade, it's a warning sign for me. I'm missing something. There's something that I'm not necessarily catching here. It's the trades that are in good trade location that scare me a little bit, that I know I have to take, because I know that in the past, the fear of missing out has had me buy highs and sell lows more times than I can remember. You got to change your response to those emotions. If you're going to be able to make those changes and improve your performance, it's all about change. And that's what futures is all about. Prices change, products change, direction changes, volume changes, price changes, everything changes. And that scares a lot of folks. So don't be afraid of change. Need the change that you desire. All right. We do have 3 talking Feds throughout the day today. I don't know if I mentioned that, but we've got Shaw. Got a computer coming today that will solve all my tech problems. I know you caught that, didn't you, Shaw? I thought it was me. Could be another down day. I agree with that, Anne Marie. Things are setting up for the open here in a kind of a good spot, I think, for potential continuation. Good afternoon, James. That's okay. Magic weekly kickoff level is in play. Shorts may cover before the weekend. We always are diligent of that, or vigilant, whatever's the best word for that, especially when there's been directional activity like throughout the entire week. I was thinking, okay, we're going to get that rip roar and move in the opposite direction. VT, we're going to try and stay a little bit positive. And I don't think that you're right. I think we're going to stop things before that happens. Marcelo, my pleasure. Joshua, thank you. Everything will be okay. Thank you, Nico. Spencer, Dan. I need a set of bobbleheads, one for each Fed head. Yeah, then we can pop them in the head and make their heads wobble, right? My pleasure, Milk. So it's Friday. Make some money. Trade well. Look for good trade locations. Always thinking risk first. Think risk first. Get those good trade locations close to those points of invalidation. Thank you all for joining me all week. Thanks for everything. Thank you, Anne Marie, for participating in our little party we've got going on here. Thanks, Rick. Thanks, Tom. Thanks, Mom, for watching. Thanks, all of you, for watching. Take your deep breath. Stay humble. Stay grateful. Stay creative. Accept the market's information. It's talking to us. Listen to it. I can hear it. All right, I'm going to get down to business. Turn my head around. Go find those fish. Go find those gazelles. Go find those wildebeests. Have a great weekend. Don't forget to be good to yourself. We work really hard at this. You deserve to do something nice for yourself. Don't forget to do something nice for others. Happy Mother's Day. I almost forgot to say Happy Mother's Day to all the mothers out there. And do something especially nice for yourself this weekend. Don't forget to pray for world peace and for no Chinese domination. No recap on Fridays. No. So get out there and profit, everybody. Trade well. Pray for world peace. Be good to yourself. Be good to your moms. And we'll see you Monday morning, 7:45 for the market recap. Market recap. I think I've been talking too much. Market forecast, 7:45 on Monday. Tell me about your weekend. Have a great trading day, great weekend. Blessings again to all of you. We'll see you soon.